Welcome back. The S&P now in a bear market after the index dropped nearly 4% overnight. Steeper falls for the Nasdaq as well, down nearly 5% and pushing it further into bear levels. The reason behind that is a spike in yields, with a key part of the curve inverting, typically a recession indicator. The two-year yield jumping to its highest level in 15 years now. Live analysis with Simon Ballard. He is chief economist at First Abu Dhabi Bank. He joins us live from Abu Dhabi. And Simon, take us inside this sell-off right now because, of course, as we've been talking throughout the course of the week, the May inflation data has really put global markets on edge. And now investors are looking for a Volcker moment from Chair Powell this week. Will it be 50 basis points? Will it be 75 basis points? Or is the Fed possibly even going to pull the trigger on a 100 basis point hike and knock this thing on the head? What's your view?
Hey, good morning, Dan. Good morning, Hadley. Thank you. I mean, this is clearly the elephant in the room this morning in terms of not only sort of the path towards tighter monetary policy from the Fed, the ECB this week, and from the Bank of England and the BOJ this week, which sort of accentuates the risk out there for economists and for investors alike. But as you say, it's a question of whether the Fed goes 50 or perhaps even more. And the market is now pricing in 75 basis points. I don't subscribe to the 100 basis point move. I think that would be sort of shock and awe and send the market into complete panic. But clearly what we're seeing now with the speculation that there could be a 75 basis point move against the backdrop of what I believe will still be fairly viscous inflation price pressures over the coming months really sort of just underlines that in the near term, stagflation is inevitable. In the medium term, recession looks increasingly likely as policy continues to tighten, and that's what we're seeing, as you suggested, with the inverted yield curve overnight as well. That and all the the unwind of all the carry trades, the hunt for yield trade, the alternative asset trades that we've seen during the low yield environment, are now all being reversed and dismantled.
That's right, and this big move, a flight to quality and the search for safety. But Simon, when it comes to the overall Fed move here, Hadley and I were discussing before about how it's basically going to be a real challenge for the Fed to hike by 50 basis points or even 75 basis points and avoid a market sell-off. So moving forward, when you look at the overall impact on the economy, given current macros, is the Fed going to be able to raise interest rates and avoid a recession? You said stagflation is inevitable. Now, what about a recession in the United States as a result of slowing growth and higher rates?
Again, I think that all comes down to central bank rhetoric. It always comes down to central bank rhetoric, and no more this time than previously. Excuse me, with the Fed. If they can orchestrate that soft landing, it'll require a degree of narrative that suggests that they are very still data dependent, rather than just chasing inflation. But as I said earlier, I think one of the key risks is that if you look at the underlying drivers of price pressures around the globe today, then their interest rate insensitivity of those pressures means that stagflation versus recession is increasingly increasingly probable as we move down the tightening cycle over the next several months, and therein lies the risk, if you wish. We need to see central banks again conveying that data dependency, willing to sort of sit back and allow inflation to continue to edge higher or to await that stabilization or plateauing of price pressures as we see it now, rather than aggressively chasing those pressures and trying to get on top of inflation and quell inflation, which they're not going to be able to do in the short term without triggering recession sorry.
Simon, let's speaking of that chasing, let's bring it a little closer to home. You've got WTI and Brent crude both sitting above $120 a barrel. We now understand that U.S. President Joe Biden should announce his visit to Saudi Arabia in just hours from now from the White House. Speaking of that kind of risk, what are the risks right now for the GCC countries?
Well, clearly, as we sit here with oil up at $120 a barrel, that's been a very strong fundamental, if you wish, in terms of sovereign revenues. I wrote a piece last week that did an update on the GCC region, state by state, member by member, and concluded that for the time being, while we're seeing this backdrop of increasing recession risk, stagflation risk in the US and particularly in Europe, here in the GCC, we're continuing to benefit from high oil prices. We're seeing a reduction in fiscal deficits. We're seeing a return to surplus for the first time, in 10 years for for KSA for the first time since pre-pandemic in Europe. So for the oil producers, this is a clear, boon, if you wish, for the time being. And the weaker members of the GCC as well are benefiting on the coattails of the strength that's bringing into the major producers.
And how much, in your view, how important is that, given the fact that they're going to necessarily have to support countries that are feeling the heat when it comes to food crisis, when it comes to inflation, when it comes to stagflation? And I'm talking specifically about Egypt and Lebanon and Jordan.
Yeah, no, absolutely.
Not to mention the North African. Yeah.
Yeah, no, and that's a great point. And my colleague Glenn Wepner wrote a piece on food scarcity just 10 days ago or so that highlighted those exact risks. I think what we do know here in the GCC is that we've become very sort of loyal to our neighbours, within the GCC and outside the GCC as well, in terms of those sort of monetary support mechanisms as and when they're needed. And I think we'll continue to see those. We've got the benefit in terms of, as I say, solid sovereign revenues from an oil price at these sort of levels. And it will help to concretize, if you wish, to solidify the ability of this region to help sort of neighbours elsewhere within the MENA space, should we say, to address some of the the current issues that are being felt.